Welcome to Mulready Minutes with Oklahoma Insurance Commissioner Glenn Mulready. This is a podcast about insurance for insurance folks, risk managers, and business leaders. We'll dive deep and look at what is and isn't working, talk to leaders in the industry, and keep you informed on what's happening in Oklahoma and around the country.
Well, welcome to another Mulready Minutes podcast. We're glad that you have joined us. We have a special guest today with a topic that is close to my heart and that our department is focused on. And so I want to introduce to you Jerry Messick. Quickly, I'll just read through his bio so I don't miss anything. But Jerry has over 38 years experience in the insurance and alternative risk transfer industry and is the principal and CEO of Elevate Risk Solutions. You know, I'm in about 38 years too, so we're both old, or we're both been out a while, huh?
It's old, I think.
Both of those. Prior to becoming CEO of Elevate, Jerry was with the national provider of alternative risk services since 1985. He was heavily involved with updating the legislation in Oklahoma governing captives. In his position with Elevate, he's an approved captive and traditional insurance company manager in multiple jurisdictions, both onshore and off. Jerry surrounds his personal life with his wife, Kristen, and 4 boys. We were just talking about how we share that. I've got 3 sons, and Jerry's had to corral 4 in his life. He's a licensed pilot, scuba diver, private investigator, and nationwide competitor in action pistol shooting. It's like the most interesting man description or something.
Yeah.
He's also the founding member and founding president of Oklahoma Captive Insurance Association, which we're going to talk about today. So, Jerry, thanks for being with us. Appreciate you taking time
to
shed some light in your world and space.
You bet. You bet.
Let's talk about, tell me, so in 85, it said you started there, and we got a little bit of that, but
yeah.
How has your career evolved in that captive space?
Well, most of us fell into this, right? My dad actually, in 1977, went to work for a company here in Oklahoma City to help start up PLICO, which was Physicians Liability Insurance Company. That was the captive for the Oklahoma State Medical Association. So unfortunately, he passed away in 81. I was getting my pilot's license out at the airport and bumped into the CEO of the company that my dad worked for. And so we started talking a little bit, and I knew how to type. It was still the best class I've taken in high school. And so I got the secretary's job for the aviation producer, and that's how I started in the business. But since then, just worked really exclusively with captives and alternative risk. So we worked on the Anheuser-Busch captive. That was back, I guess, when I was 23. And then just started from there, working into the captives and getting to know people like Gordon Amini, who used to be the general counsel here. He's since retired. But Gordon has taught me a lot about that, and been blessed to work with some great people.
Good. So that captive world, we actually have done one episode. One of our earlier ones was on captives, with, as I jokingly referred to, as the queen of captives. But so kind of opened up that story. But the captives allows for folks, number one, a lot more flexibility. So talk to us, will you, about the advantage of a captive, who does a captive, sort of some basics.
Yeah, I think it's people that are tired of throwing money over the fence. Right, and the premiums, and usually you have to be fairly good sized with premium spend on an annual basis to be able to qualify, right? Because it costs money to set up and manage the captive. So companies that usually spend somewhere north of $750,000 a year in total premiums, that's for a single parent, which is owned by, so you think of Apple, right? They have a captive that insures Apple Care for the iPhone, and that's what you pay them for. Well, that money goes into their captive. So it allows companies to be flexible, right, and reactive to their clients' needs as well. So a number of companies will take high retentions, high deductibles on their commercial policies, and then they'll put that into the captive because they have good loss experience. So why not save that money and make that profit, and you can invest it in the captive. And over time, hopefully, you'll build up a reserve of surplus.
Got it. Well, we might have to edit out that mention of Apple, or at least send them an invoice, maybe, to, for that.
I recommend
free
the
plug.
Invoice.
Yeah, so there's that piece, but from group captives, talk a little bit about that, or how that might differ from your single parent where they're just taking care of their own risks. Sort of thing.
Group captives are probably one of the biggest growing segments of the insurance industry right now. So we manage a number of group captives, and I'll give you an example. This one group captive that we manage is for commercial contractors. And as you can imagine, commercial contractors pay a lot of money for their general liability, their workers' compensation, and their other lines. So we built this captive. And without getting too technical, it's fronted by a very large A-rated insurance company, so they can meet their certificate requirements. But this captive sits in the back. It reinsures that big carrier. And so it gives them a lot of control over their own destiny. And so if at the end of the year they have kept more premium than they spent out in claims, they get to keep that money. And over time, that can be as much as 30 or 40% of their premium.
Wow.
So it's significant savings.
Yeah. And the risk side of that,
absolutely.
When you're transferring risk to a traditional insurance company, that risk is gone.
It is.
Talk to me about the risk
that's
transfer
kind of sleep,
in this world.
Yeah, that's kind of sleep insurance for some company owners too, right? They like to buy that insurance and not have to worry about it. For those who have really good risk management programs, though, and they understand what their loss profile is, right, how much money's going out in claims, and they can control that with good risk management programs, they want to keep that money. Right? So we put a small layer of risk in the captive, and then we buy reinsurance in turn for the captive. So kind of think of it as a stop loss, right? There's only so much money they can lose in the year, right? But again, for those that, and obviously I guess backtracking a little bit, you want the best risks in those captives.
Yeah.
You're not putting in 120% loss ratio accounts in that, right? Because that's not what you want. You want to be able to save that money for them and invest it and earn income over time.
Yeah, I think the overriding part of that is you want in captives those that are aggressively risk managing and are attuned to that and are doing something about it, as opposed to companies, if I can say it, that are lazy.
You know what? That's an excellent point. We managed a group captive now almost in its 20th year. And this is for nonprofit, faith-based nursing homes. And of course, you can imagine medical malpractice is a very expensive line of business. This company's averaged about a 25% loss ratio over those years. So it just kind of prints money for them. And they've been doing it for 20 years now.
Wow.
So it's been a very, very successful platform.
Great success story.
Yeah, it really has.
So you mentioned that group captive is growing, quite a bit of growing. What else is coming, or what's the newest in the captive world, or where do you see that things going?
We've gotten a lot of phone calls on cyber, right? Especially in the healthcare and the financial services. You look at a bank right now, and I spoke with one not too long ago in a close state, proximity to Oklahoma, that was paying $500,000 for $1 million limit, and they had a $250,000 deductible. So you add that up and you think, okay, there's only $250,000 of coverage. Yeah, crazy, isn't it? So that's what's going on in that market. And so people are looking because they can't afford that. They can no longer afford that. So they're looking to band together, right, and create a group platform for cyber. Medical stop loss, health insurance, right? We all know that that's kind of out of control. The trend factors on that's running close to 10% this year. So banding together and kind of acting as a shock absorber, right, for the captive, it actually levels things out. And if companies aren't using their health plan as a benefit, true benefit, and a marketing tool to not only retain their employees but go out and solicit new ones, they're doing it wrong, right? They need to be actually pouring more money into those benefits for their employees, and we can show them how to do that with medical stop loss.
Got it. Good. And I might mention, selfishly, make a plug, but you were able to be a part of and a presenter at our first IBT and captive conference. I don't know what we were, about 6 weeks ago maybe or something, at the new Omni Hotel. It was a huge success for us. We had 289 people attend. Beautiful setting. We got a lot of great comments, and thanks for you and other presenters that added that content to that. So any comments on the conference or conversations you had there?
Let's do it again. I have to tell you, I had folks that flew in from Delaware and Tennessee, and I forget how many different reps we had from the regulator side of the house.
We had a dozen states.
It was 12 or 14 of them, which was an incredible presence. But I have to tell you, they were calling me and saying, Jerry, that's honestly one of the best conferences we've ever been to. We'll be back. And I was just thrilled.
Nice.
I was thrilled to see that response. And Oklahoma is growing. And, Glenn, quite frankly, that's because of your leadership. So I've been doing this a long time here in Oklahoma.
He's unpaid.
I am unpaid, but I don't mind touting that because it's really important for the industry, and you've been a huge supporter of it. So we appreciate that.
Good. Yeah, we had 12 insurance departments in attendance, which was nice on both topics because there it wasn't just the captive conference. We had IBT, which is a new concept for a lot of folks, and doing that and it's been a focus of ours. The captive. We want to grow our captive division, and we've been doing that. And I'm this close, not quite. Wanted to be able to announce a new captive director that's going to be coming in.
Fantastic.
That I think you and others will be quite excited about. So, unfortunately, not quite ready for release at this moment.
That's too bad. That's too bad. I'm excited to hear.
Let's transition briefly over to the Captive Association, the Oklahoma Insurance Captive Association.
Yeah. So this is a group, and a lot of states that have captive legislation on their books have associations. We built this one here in Oklahoma to do one primary thing, which is work with the department on improving the legislation, right? There's always tweaks, and I have to tell you something. Oklahoma has honestly one of the most cutting-edge pieces of captive legislation anywhere in the United States. I think there's about 38 or 39 states now with captive legislation. Back in the 70s, there were 2. So you can see the growth of that, and Oklahoma's been a big supporter of that. So the association is really intended to work with the department. So I'm thrilled to hear about the new director. I may be twisting your arm a little bit later, but I think that's fantastic, and that will work very well with the association. And if you guys are interested in looking at it, it's okcaptives.org is the website. It's up and live right now. We're expanding the membership of it right now. So there's a form on the website. You can reach out to me, and I'm kind of steering this until we get the full board put together. And we're looking at different industry specialty, especially owners. We want owners on the board of captives. I mean, those are the folks that are really driving, what it means to own a captive and manage one.
Yeah. So. Good. So it was started a while ago, and we did some things. Kind of hit a lull, and now you and others are reactivating that and getting that rolling.
Yeah, that's exactly right. So we're looking forward to it. We're reaching out to actuaries, to auditors, to tax preparers, captive managers as well. I've spoken with a number of those. They're all willing to step up and serve on the board. So we're excited about having that.
Yeah, that's real exciting in that space. Well, Jerry, as we wrap up. Anything else within your world or within the captive world that we need to know about or that you'd like to discuss? Anything at all?
Yeah, I think that, captives are really now becoming more known. It used to be that we would reach out, and of the 10 prospects or of accounts that we would talk to, probably 8 or 9 of them had never even heard of a captive. I think that number's down around maybe 3 or 4 haven't heard of a captive, right? And so the education is really important, and that's what we're trying to reach out and do right now, trying to develop Oklahoma as the penultimate platform for captive insurance companies, and I think we'll get there.
Good. I guess that makes your world a little bit easier. You don't have to spend near as much time educating.
Absolutely.
And, I'm sure there's still quite a bit, but
that's
good.
Exactly right. So we're thrilled about the future of captives in Oklahoma and appreciate your support very much.
Good. Well, Jerry, thank you for joining us for this version of the Mulready Minute podcast. You've been with us with Jerry Messick with vast experience in the captive world, and so you can reach him online.
Absolutely. Jerry at elevaterisk.solutions.
Okay.
Yep.
You heard it there, and we will see you next time.
If you found this episode informative, please subscribe and share with your colleagues. Visit oid.ok.gov/podcast. Let us know what topics you would like to hear about on this podcast. Until next time, take care from the Oklahoma Insurance Department.